let's have a look at how to use candles and bars in your trading. Here again, I haven't gone over certain candle patterns or bar patterns in this course because I don't feel they're relevant. They're very retail. Institutional traders are not looking at a hammer or a bearish engulfing candle and saying, you know, let's go short or long because of this. The way they look at candles and bar patterns is really about commitment, okay? So what you're doing is you're identifying your key areas of support and resistance, or your zones, as we've gone over. And what you're looking for, and this is here again, you know, this is very important to focus on your higher time frame. So daily and 4 hour are my main time frames that I look at this on, but hourly also very important. The smaller time frames, although they can act in decision making, they're prone to not be as accurate. Okay, so here again, if you find these sort of occurrences on a daily or 4 hour chart, it can really add a lot of weight. Here again, key areas of resistance or support, and what you're looking for is price to actually commit, okay, and close. So you're looking for big candles to close below key levels, and this really just shows commitment from the larger flow. So here again, you know, you want to have a key area of support or resistance identified, and once price actually commits and closes, and here again, you want to see a decent size candle, right? You don't want to see it just close very briefly below or just above a level. You want to actually see it take out. You see these wicks, for example, here. You want to see it clear and close. The important thing is it must close below these areas, and the closer it closes to the lows, the more weight it adds. Okay, it just shows institutional flows coming into the marketplace, and it can be a good sign that you're going to be heading lower. Okay, so we just follow price along here, come up to an area of potential resistance. Okay, here we can highlight it. And you're looking at, remember, we're looking for patterns around these areas, and if we're going to break through back up into this area, remember we've now hit this level a good few times, so you know it's not as important as it was when it sort of first comes up to the level. Remember, talk about order flow and how price sort of eats into the level, eats up those orders. So once again, you know, you can still look for possible patterns around here, but you're really looking for, you know, when you come up to an area after so many times and sort of a gradual approach, you're looking for that breakout. And once again, okay, what I'm looking for is looking for big candles, and I'm looking for the close. The close is very important. Okay, so once you get close and you show commitment from the larger flows above that level, okay, it's very key. Here again, watch these wicks and the previous candle bodies. You want this candle here to close way above them, okay, just to show that commitment, okay, because if it just closes right above, you know, just a short distance above, it's very prone to get sort of a false break where, you know, essentially what's happened when it sort of just closes above and then moves straight back in, okay, that's a false break, and it's just really a liquidity hunt. Okay, so institutional traders will push price just above the level because they know the stops are going to be sitting at that area. Okay, so they can grab those stops, get a better fall for their larger positions, and push it down again. So just be wary of that. This indication here and here is what you want to look for. Okay.